All right, yeah, well, welcome into to the our our private circle study groups. It is Sunday, August 3rd, 2025. I'm your host, Gerardo G Money Pies, and yeah, today we'll be doing a speculation session when it comes with gold. Kind of review what happened last week. This is the chart that we had last week. Just kind of review it. I did find a very interesting teaching point that I want to share here. And yeah, but as always, right, these calls are for educational purposes only. So any trade idea, any suggestion, it is speculation on my end, you know, and make sure if whenever you do trade live that you know how to manage your account and know how to, you know, protect your capital, all those good things. But yeah, welcome in, welcome in. Let's go ahead and just kind of quickly hide the video panel so it won't get in the way on the recording for here. But yeah, this is what we had last week, guys. And actually, let me circle this before I want to forget. Okay, and yeah, this is what we speculated this week. These little lines you hear are basically separating the weeks, and here I won't forget. And this is how the week started. This is what we speculated last Sunday, right? Last Sunday, we did our thing, right? We started with the weekly candle. It had a huge wick from top to bottom, ended up closing bearish. So there was a lot of selling pressure from the top, right? A lot of selling pressure from the top. And we fibbed it, right? We fibbed it. And, once we measure that impulse, right? I think, you know, our job as traders, right, is to find the impulse, find that direction that we want to go to. And once that impulse is established, then you pivot up, right? Then you measure it. The fib is like a roadmap. Okay. The fib is like a roadmap. What gets confusing is obviously when you change time frames. What gets confusing, what adds a challenge, excuse me, is when you add multiple fibs or when you change time frames and so, right? Well, the change in time frames, could be simplified simply because this fib right here, okay, right, that is these are the previous weekly high and previous weekly low of that week. So long story short, right, those levels don't change, right? Those price levels, that measurement, that map does not change. The only thing that we're changing is the candlesticks. Okay. That's the only thing we're changing is the candlesticks. And I think a lot of things that also gets us confused a little bit is the fact that in the very beginning, early on, everybody's mostly everybody's trading journey, right? They teach us to look left. I got taught to look left. I probably taught you guys at some point to look left. Some other education or just experienced traders, they're teaching you to look left. The left is important, right? Left is important. However, though, right, just the way that I draw up the fib, sometimes you don't have to look left that much because if this is the start, this vertical bar here, this is the indicator that I used to kind of have called weekend, Saturday and Sunday. So basically, you just kind of just split the charts up, and let you know when it's the weekend, right? And here, right here. I mean, if you look left, I mean, excuse me, if you look from right to left, you know, using the guide of the Fibonacci, right? Um, Price was here when it opened. We were hoping for it to come to the 23% and then sell all the way down back to the extension, right? That was your plan. Well, it's not going to happen to the T. It's not going to happen to the exact markup, the exact touch, right? What's going on, Joe? Welcome in. What's going on, Carrie? Welcome in. And because there was just so much momentum, right? So we never got there. We never got there on Monday. Sold off on Monday, recovered on Tuesday, sold off on Wednesday. Thursday, we did another pullback. And then Friday with the NFP, it now went back, right? Now went back to the areas that we were looking for to come from Monday, right? That's why, like, I really don't like to play the setups. I really don't like to leave a setup, you know, long term for entry because you never know, right? The momentum, the whatever the price decides to do that day, right? Whatever the wind blows, I guess you could say, that's where the price is going to go. But it is all calculated, right? It is all calculated because if you guys see here, when it actually dropped, the first level that it touched was the negative 18%. All right. Let me just a little bit so you can see it better. All right. When it first dropped, okay, the first level that it touched was the negative 18. It did a little recovery and then it came back and touched the zero, give or take, right? Which simultaneously was the previous weekly low. So what else happened here? It broke the previous weekly low, correct? Break and retest, right? Break and retest. Would you guys say the same thing, right? Break and retest of the previous weekly low. Now, it's not going to just retest and turn around. As you guys see, look at all these. If this line right here represents the previous weekly low, that red line, look how many touches it did. How many touches it did. It was there for a very long time. Very long. From the first touch, 27 bars, which is 1 day and 4 hours. A whole day. Trying to make a decision. And then it finally drops. Right? Now it did surpass those extensions that I normally use, but it came in cleanly to a previous weekly open. Because I mentioned to you guys, the open of prices have been areas where if we're trading towards it, um, those are great take profits, maybe a little bit sooner, right? But I like the weekly, I like the daily, and I like the 4 hour, higher time frames. Don't get too caught up on the 8 hour, 12 hour, in between type of um, opens and closes because they all change with brokers. Okay, they all change with brokers. And here's what's interesting, guys. Okay, this is what I was gonna share with you. What do you guys see right here? Okay, what would you guys describe? Well, first of all, what kind of ETM candle is that? What would you guys say that is?
Drop, let's drop.
Oh, actually, you are right. You're right then. Excuse me, you are
Yeah, the
right.
bees.
No, Ron's actually right. It is a drop-based
Ron's
drop
right. Yeah,
BEC. I was
yeah.
looking at the BEC, but yeah, he's absolutely right. It is a drop-based drop. Let me zoom in a little bit better. But yeah, no. It is a drop-based drop turn BEC. Good point. But whatever is catching my eye was catching the BEC to the top side. Okay. That is buyer stepping in, engulfing candle, and BEC, right? So here, demand is in control. See if we can take it to the top side, right? And if that doesn't fail, excuse me, if that doesn't work, it'll break, somewhat retest, and then go down. That's how we play the BEC, correct?
Yes, sir. That's how we play it.
Let's see what happens. See, came in, buyers didn't really step in, the candlestick closed bearish, and then the next candlestick just dropped. Well, check this out, guys. This is on the forex.com chart where this BEC is at. Let me do this. Let me do that. And I want to share this with you guys. See layout. That. All right. So we are here. Okay. What I'm gonna draw with you to you guys is right here. So see this on the right hand side, they're both forex.com charts. Nice BEC. So we can tell a story here of the demand and control, flip zone, etc. If I go to a Saxo chart, very similar. They're the same. There goes this candlestick right there. Engulfing candle thing, this and that here. So to me, right, this is telling me, this is communicating to me a few things, right? Okay, if this BC doesn't work, we look for the sells, right? If this demand BC does not break up, then we go for the sells. That's a good plan, right? Because that's how we play the BC. But what if you don't do forex.com? What if you don't do Saxo? What if you do what if you only do Oanda? Right? What if you only do Oanda? Right? You see right here, guys, there is no BC. There is no BC. See how the cursor's right there? There is no. So what do you do here? Right? What do you do here? That's why all I want to say, right, is that momentum is very, very important. Because momentum is very similar through all time frames. And there is no BC play there.
Well, that is a good idea, but here's a suggestion. We can go back to Miss Letitia's three candlesticks. Go to the previous three candlesticks before these three bullish ones.
Right here, Dan?
On the chart. No, the ones before that, just before.
This is on the right-hand side, it is the ON.
There we go, cool. So we got the three big candlesticks, pretty good momentum. We got the pullback, if just measuring just that impulse. Then we got the correction, and then we got the big three in a row candlesticks. So just going by that structure alone, just think about that structure. The three candlesticks, we did not get three strong bullish candlesticks going the opposite direction.
Okay.
In comparison to the BEC. However, what do we have instead? We have a break of structure candlestick on the Oanda chart. Right in the middle there of your chart, up at the top.
You try to draw that down so I can makes it a little bit easier just to follow.
Right here.
One thing I do want to add though before you continue, this arrow right here, this arrow represents the Sunday 27th, July
so
25th.
This is what we're working. That doesn't matter. Same difference. Yeah. Same difference.
Yeah.
Then again, we're turning around and got Dr. Latrice's Morning Star or Evening Star. So either way we win, but isn't it interesting how even here we've got this nice BEC here. Then it turns around. Here's this BEC, which is this structure. We got the big impulse. And then again, we got the three long candlesticks coming down.
I like what you're doing here, Dan, because obviously how you're focusing on structure. And it kind of goes back to what I was saying in the beginning, right? We got to find that control, right? We got to find that control somewhere. And sometimes, even though I love the one candlesticks, even though I love the ETM candles, right? Because these time frames change or the candlesticks change based on what time the candlestick opened, right? In this scenario here, like if somebody just only used forex.com, they're probably looking for the buy or waiting for the flip zone, right? Over here on this side, let me kind of balance it out a little bit better. Because that blue arrow represents practically almost the same time, guys. That's what we're trying to say, okay? Like this high here, I can't draw in it because it's just different charts. This high here is very similar to this high here, right? This little lows here are these lows. And then this is the pullback here, lower high. And then this is the pullback here, lower high, right? So on the forex.com, this BEC pattern could start kind of saying, okay, the buy is ready. Over here, if you take these into consideration, they're probably all together. They're probably communicating the same thing, right? But again, though, right, it's just the candlesticks, here they're totally different. Which one do you rely on? That's what I'm saying, guys. It's just better to be kind of well-rounded in reading momentum because there's different data all across. if I check my phone on the 4-hour chart and my broker here, see the broker that I'm using, the what's it called, Global Next Trade, I realized that it adds an extra day on the charts. It's like when Friday closes, it closes. And then the first hour of Sunday, it creates a candlestick and then it closes that candlestick. It's just very interesting. And then it readjusts. You know, it's just the way it is, guys. It's just the way it is. I wish I could say something better about that, but that was I noticed that on Sunday that the candlestick opened and then it closed, or it was very, very weird. But you know, all I'm saying, guys, is the the price action is important. Keeping the bigger movements in frame is also important, and just especially with gold, right? Double checking other brokers kind of does help us a little bit. Alrighty. Appreciate the feedback there, Dan. Let's see, let me go ahead and continue there. Oh, by the way, will you be having your sessions today? Just so we can make sure we.
Yeah, I will. Yeah, absolutely.
Perfect, perfect. I was going to set the reminder there. All right, guys. So let's see what gold has for us this week, right? Last week we did this. Okay, this huge candle. We came back and touched the open. And then we got a nice bullish impulse. I mean, that candlestick looks like it's ready to take off. That candlestick looks like it's ready to take off, right? I think we're going to go higher. I think gold has finally decided to go higher. Remember, the opens of prices, they do have a lot of volume. I've noticed as well that when the wicks somewhat have covered price, it's easy to go through wicks. And that sounds a little bit like backwards. But yeah, it's like price has an easier time going through wicks simply because the wicks have eliminated opens, right? And because we got all the rejection from there already, now we can potentially go up higher. So whenever we were here, check this out. When we were here last week, right? This wick came to this open. The next resistance was this open here. And because we had these little wicks, right? Price could get there a little bit easier. And then hit play and one more time. And there it is. It got to the open. And then it just completely did this. So that looks pretty good. Okay, that looks pretty good to continue going upwards. Let me go ahead and do our regular measurement. Our markup, our top down analysis. Find the control candle. We'll use this one because it's a pretty strong one. There may be some other ones, but we'll do previous weekly high. We'll color that blue. And then we do previous weekly low. Like that. Previous weekly low. Perfect. All right, that's our range. Here we'll go down to the 4-hour chart. And just to kind of see, like, we're still definitely ranging, right? We're still definitely ranging. There really isn't too much supporting structure like behind this low, because we're in this range, right? So our next best thing is, okay, let's just go ahead and mark up the low to high with the fib. All right, my previous week fib, and there we are. Okay, there we are, right there. Perfect. Okay, so that's where we are for this week. Okay, it's to start this week off. All righty, let's see how the momentum looks on the 1-hour time frame. We have the ETM indicator. Where's it at? Where's it at? ETM candle right there. All right, and we're still bearish on this. That's what's interesting, right? We got a bullish week, but then we still have a bearish 1-hour S&T momentum. right? So how much time does this have left? Let's count this wick right here. So for about a day and 12 hours, a day and a half, this push down, okay, is still there's still some sellers in this area here. Anything here, Danny, you want to add? I know you got a good eye on this too.
Oh, no, you're right. Yeah. Yeah. We'll start lowering that 204 midpoint. Yep.
Okay, perfect. So there we are, guys. Okay. So then this is kind of the movement that we have to keep in mind. This is the previous week. Okay. This week, the current week that we're going to be speculating will end its trending candlestick at that level. Correct. So what we're looking for is ideally we want a pullback, maybe to 23%, maybe around 38%. Monday, Tuesday, that's what we want ideally, right? For Monday and Tuesday. And then on Wednesday, we wanted to kind of do this, position ourselves for the buy, and then take profit over here, no matter what day it is, Wednesday or Thursday, or maybe that same Wednesday, Thursday or Friday. That's what we want ideally, right? Because that will complete a impulse correction impulse. And it'll complete that. Okay, does everybody follow along there? That's exactly what we're looking for. If price behaves the way it should behave. So let's call this plan A, right? Let me just go ahead and just take a picture of this and open a new tab for now. Interesting. That took a snapshot of it? That's a drawing from Zoom. Oh, it's because it's over here. Sorry. That's what happened. Caffeine hasn't kicked in. Let me go ahead and take a snapshot like this. Okay, so ideally, this is what we're looking for. And I'm just saving these for the board. For just our records, we won't lose track of it. That's what we want. Okay. Now let me clean up the charts here. But what happens if we go higher first and we don't get that pullback? How can we get some confidence to sell from there?
Easy.
What,
Once you
which
hit the extensions, you definitely, because again, we're going to be looking at that rubber band effect. Look at the pip range, isn't that average daily for and some? We're hyperextended at this point, right?
super hyper extreme, yeah.
So yeah, if it goes over that, it's going to snap back,
Mm-hmm. That's actually good. There's an observation there as well. That would definitely hyperextended, man, big time. Okay. Thanks for that, Joe. I'll take a look at that very quickly as well. But check this out here, guys. Let the fib guide us so we don't have to guess too much. We fib this sucker right here. Right? And what level is that extension? Let me add in there a 61%. And look at that, guys. That level here that we have interest in is around that 61% level that we normally want price to go towards. Correct? So this is this here is the box. The box is impulse from high to low. So we're trying to frame that price, right? We're trying to frame that price, which is this one. This fib is just simply previous weekly low, previous weekly high, one candlestick. I see. Joe may see an Elliott wave here on here. Let's see. I do see these waves, Joe. 1, 2, 3, 4, 5. Pull back here. Not really an Elliott wave, but we did go down in waves. So that is good. That is good right here. Okay. So I do like, some potential area of resistance here to bring us back down. So plan B is if we do not get that push down to 23% as we had intended, price will stretch out just a little bit more. And then from there, will give us a nice correction back down to 23%. Okay, let me draw this one more time. Like so. Let me take a picture.
And an interesting thought on that, if we're looking at if it doesn't, if it shoots up, it's definitely this high right here is what we need to take out to continue creating a higher high to continue going to higher prices.
And I do like that little area there. So now let's look for some ETM candles. Okay, look for some ETM candles in this impulse down. Okay, let's look for some ETM on both directions. How about that? Both directions. So we can go ahead and hide indicators. And let me at least mark this high. Just so we won't lose track of it. And low. Perfect. All right. So let's go to the daily. Let's see how things look on the daily. All right. Okay. Remember, we're trying to focus on some type of resistance, right? We're trying to focus on some type of resistance and the things that we're used to seeing, like, where does price usually like to turn? All right. So you guys know this zone, what it is, right? This is the extension of previous week. We'll do this like this. Previous week extension. Okay. Right there. All right. From the daily chart, what confluence can we find? Now we can look to the left that will give us confirmation here. We'll take any answers. What do you guys see? What do you guys see?
An open and a close. If you look at this, you got the open and close of these two candlesticks right there.
Okay, perfect. Dan's finding confirmation here at these opens. Perfect. Anybody else? Anybody else? So you can type it in and mute, whatever you want.
Drop, base, drop.
Drop base. This one down here?
Yeah. That won't help.
No, that won't help on this territory here.
All right.
Was that you, Leticia?
Yes, sir.
No, but
this is almost your play
you're
right
right
here.
on. There is a drop base drop right here.
I
Okay.
see that.
Flip zone.
Okay, that would definitely take them back into consideration. Absolutely. Good one. Yeah. What I was keeping my eye, I like the opens, but I also like in this scenario, right? In this scenario, we actually have 4 consecutive drops down, right? And if we box those up like we've been doing, and we put a midline in there, give or take, there goes that midline. Now, granted, we want to focus mainly on 3, and sometimes that 4th one is just that extra candlestick. We can just take the last 3, and that midpoint is right there.
Oh, that's like I've never thought of that.
Right there as well. So this area is starting to be a good area for price to kind of like get towards, and then from there, give us that pullback we need. So it's around that price line of 33.83, give or take. Okay. And again, all we're doing is just mapping up the price. So, okay, where is it going to go? So we can kind of create a destination to absolutely fair value gaps right here, especially on this candlestick right here. Okay. Especially in this candlestick right here. Okay. Yeah, I think these patterns are definitely called that, Dr. Latrice. The black crows and three little soldiers type of thing. They've it's been a pattern that I just came across it. I never really researched it, but I realized that if it holds, it continues going lower. If it breaks, I mean that's a good reverse. It's a good reverse. Yeah, but we got a good zone right there. Okay, very good zone to consider. Right, we're finding those confirmations. So let's go now to the 12-hour. Well, look what we have here. Drop, base drop, right in that zone, and then a rally, base rally, dad, flip zone just above here. Right, more confirmation there that helps us. 8-hour, 8-hour, another little drop, base drop there. This is interesting here too, right? Because this was a BC that can work like a flip zone, and it's all in that same area. Alrighty, and then let's continue going lower to the 4-hour now. Okay, then talk about these little highs here. Once we do take this high, right at the give or take at the 61% retracement, I do like that. I do like that as well. Okay, but at the same time, right, the 4 hours are also creating their impulse. Remember, what was plan A? If we can get back down to about 23%, maybe 38%, right? We're grabbing the opens of each 4-hour candlestick, and then technically this big rally base rally, that's about 23% of that rally, of that engulfing candle. So then again, if we don't push up like this and we come down first, this price level of 33.40, 33.40, 33.30 are definitely a good area for us to position back to the top side. Alrighty. Let's go to the 2-hour. Nice little rally base rally there. Look at this. Nice little candlestick there. And yeah, we won't go any lower. I think that's perfect. I think that's perfect where we're at right there. Okay. So long story short, let's go ahead and find some. Let me see, right? 23%. Oh, they're right here. You got Dr. Latrice. Now that we get down there, we get down there. That'd be good. Let's see here. All right, perfect. So I'm interested in the 23% of the previous week. Okay. Right there. That's what's catching my attention. All right. Anywhere between the 23 and the 38% of the previous week. That is definitely catching my attention right there. 38%. All right, guys, that is catching my attention. So plan A, let's see if we can get here first, and then we can buy, okay, as we mentioned earlier. That'd be the plan A scenario, like so. Okay, plan B is, okay, once we hit up here, maybe then we'll come back and trade down. Okay, so I'm gonna put this one in green because that is my preferred plan right there. This one, I'll make it a little bit lighter as a plan B. All right. So in the middle, right, we kind of just, if we have the confirmation, we could potentially trade up. that'll give us approximately, $30, 300 pips. But if we can get it from the top back to 23%, that is 470 pips. And if we get lower first, back to the 23, 38%, back up, that's that move that we want. Okay. That's that move that we want. All right, guys. So this is a speculation. Plan A is we get the pullback first. And if we don't get it, well, we don't get it. There you go, Dr. Lucius. A ton of pips. And we've been catching them too. We've been catching those pips as far as the direction is concerned. All right, guys. Well, this will recap today's session. I have to leave right immediately, so I won't be able to put it in the recording right away. But once I get back later on this afternoon, early afternoon, we'll go ahead and share with you guys the recording. You'll get it if you're following the YouTube channel. You should get the email alert. But no, everybody have a great weekend. We'll come back again for next week for trading, and we'll carry on. We'll carry on. I did share those links, right? I think Daniela's also sharing them in there. Yeah, and if anything, guys, remember, try to move over to that Discord. The WhatsApp group will remain there just in case somebody's kind of hanging out. But we'll try to get over there. Also, any communication, try to do it on Discord so it won't confuse us. So, and ideally, we'll starting this week, it'll just be two communication channels: the Discord, and if you're part of the Yes or Yes Academy, we're still using that Telegram. Okay, the Telegram of the Academy. I'm gonna try to see if I can get that approved, so I can run it on the Discord and just be one channel. But other than that, the WhatsApp group is just there for emergency. And then once we all get used to it, we'll be fine. But yeah, we do have that channel inside of the Discord where it's very similar to the WhatsApp.
Yeah, and then all you got to do is make a study group channel as well in the Discord, then we'll be done with what's
Perfect.
Yeah.
Thanks for that, Dan. I'll go ahead and do that. Take care of that later on this afternoon.
All right, cool.
Perfect. Thank you, guys. Have a great one. We'll see you guys Monday. Start chatting on Monday. See ya. Bye-bye.
Thanks, G.